Hello and welcome to Views from the Market, mid-market private equity and M&A in Canada. My name is Mario Nigro, and I'm a partner in the private equity and M&A group at Stikeman, Elliott. For today's podcast, I'd like to welcome our special guest, Eric Ries. Eric is the author of The Lean Startup. Eric, thank you for joining us and welcome.
Thanks for having me on.
Eric, there's so much to talk about with you that I don't even know where to begin, but we always start at the same spot. I'm excited for our conversation, but we start with talking a little bit about you. If you could tell us a little bit about yourself, and we'll start there, and then we can kind of jump into
Sure.
your latest book, Incorruptible.
Oh, thanks. Yeah, no, I'm a longtime tech entrepreneur and founder. I wrote this book, The Lean Startup, in 2011 that kind of changed my life and gave me the opportunity to kind of travel the world and help so many people start companies. You name a sector, size, geography, like I've done it. I've done deep sea oil drilling, and I've done biomedical stuff, and I've done manufacturing and software and AI and cancer treatments, and you name it. Like, people have tried to use Lean Startup to build companies in that combination. So it's been an incredible, almost like getting a backstage pass to how business really works all over the world. And that experience of working with so many companies, startups, small market, mid-market, big market, public, nonprofits, governments, you name it, I feel like I got to see it all. And so I got to really get a good sense of like the big macro scale problems that are causing our economy to lose so many trillions of dollars in value, and short-term thinking, the kind of maniacal focus on shareholder value instead of on quality and sustainability, so many issues that I became educated about. And what I realized a few years ago, watching so many of these companies, they start out so idealistic and beautiful and trying to really make the world a better place, to watch them get surgically deboned year after year as they compromise the things that made them special, to the point where so many of our big companies today in the US and in Canada, they're weak, they're lame, they're bureaucratic, they're malign. We all take it for granted that that's how it is. But I don't think it has to be that way. I think actually it is possible to build organizations that are incorruptible.
And you take me where I want to go. I mean, your new book is super interesting and really thought-provoking in terms of where it leads us in thinking about the values the corporations bring. And you highlight in the book, I mean, the focus in the last 40, 50 years, what I call shareholder primacy. I think that's your word, shareholder primacy, as opposed to corporation primacy, in terms of looking at corporations for more than just profits and what the return is, and really trying to build corporations that are more than just about profit. I think you call it profit extraction. And what is it that got you to focus on this topic? Because it looks, to me, it sounds from the book very personal. And obviously you said some of the work you've already done, but one of the things that I find super exciting about this book is it's just written with a very kind of strong personal sense of commitment to this. It's more than just the book of what you see out there, but something that you feel very strongly about from on a personal level.
Yeah, I mean, I've had the front row seat to watch this calamity unfold. So this is not like an abstract problem to me. I have literally sat with so many boards, so many leaders, so many CEOs, so many founders, so many investors who can't understand what's happening to the companies they create. So I tell all kinds of stories in the book of people who lose control of the thing they care most about. Sometimes because investors take it away from them, sometimes because they themselves fail the test of succession, sometimes because their board betrays them, and sometimes because they even lose control of it to their own employees, is how they talk about it. Like, the thing becomes like Frankenstein's monster and they can't bind it anymore. And as a result, we're seeing more and more and more companies, more and more organizations all across our economy become untrustworthy because there's nobody in charge and there's no one you can hold accountable for their bad behavior. So yeah, I have witnessed this firsthand, and I've also helped people defy this force by using a set of techniques that today are considered not best practice, but should be, that are better than so many of the corporate governance best practices we've all been indoctrinated to believe.
And one of the things that you highlight in the book is some of the ideas that you bring up, like this, focus on things like trustworthiness or a mission-driven purpose for companies, that frankly, these things lead to more profit. This is not about profit versus, this is actually about something better than just focusing on profit, that if you want to make companies really profitable, you actually focus on some of these values that are frankly, as you point out, like key to driving profit. I mean, the book has just chapter after chapter of examples of showing these companies that have kind of a mission-driven purpose that leads to profitability and success in so many different ways, not just revenue. And frankly, great stories when it comes. I mean, as you bring up the Costco story is a great example.
It's an incredible story. Yeah. And this was maybe the biggest surprise to me when writing this book. It is kind of an open secret among people that study these things that this way of building business makes more money. If you just talk to most investors, talk to most founders and be like, will you make more money if you're an extractive a-hole, or will you make more money if you're purpose-driven? Like, people will be like, well, I want to be purpose-driven, but I'm worried that if I don't do a little bit of that extractive stuff, I'll be driven out of business. And we have an implicit idea that the more ruthless way of business is the one that is less trustworthy. But we have so much data that shows that being purpose-driven outperforms. So that is, all the very best companies are that way. And these are not just cherry-picked case studies. We have really good longitudinal studies over decades and hundreds and thousands of companies that show that there are practices that are value maximizing. So to me, it was kind of shocking how much unanimity there is among both the academic researchers who study this, but also among the best leaders who I admire, the people who've made the most money, the people that really seem to me that have stood the test of time with their work. All of them, if you ask them what is the secret to their success, they always talk about how mission-driven, how purpose-driven they are. So to me, this is just a matter of bringing awareness for both practitioners and investors that there is a better way out there. We don't have to put up with this kind of lame stuff we've been taught is the best.
When I read Incorruptible, one of the things that I kind of translated to is my work, buying and selling, working for owner-operators or buyers of companies or sellers of companies. It was super interesting because what your analysis shows is that often when we look at it from a buyer's point of view and they're looking at a company, obviously you focus on the balance sheet, you focus on EBITDA, you focus on recurring revenue, you focus on all these kind of key elements of what makes a company interesting from a buyer's perspective. But your analysis seems to suggest that buyers, if they really want to see long-term value, long-term profitability, or really supercharged profitability, they got to be looking at other things too. And you kind of list a few of the other things, especially when you're buying from an owner-operator. And I think what your analysis is also important is, and not only just looking at those in terms of appreciating value, but in terms of where you take these corporations next after you bought them, not to lose the secret sauce. I mean, when you look at it that way, what would be your advice when you see a company that, is an owner-operator business that someone's looking at buying? What would be your advice to a buyer when they're looking at these businesses? Let's say they're doing all the regular diligence, but it sounds like you have a second.
No, so if you're a buyer with intent to operate, you're not just a chop shop, okay? Some people have an explicit plan to be like, ooh, anytime I find trust, I'm going to break that trust to make $1. Okay, there are investors like that, but I'm assuming your listeners are not like that. That's extractive. Those practices are corrupt, frankly. If your goal is to operate the thing that you buy and be a good steward of it, then that's the question I would want to know is what protects the ethos of the company? What's its character when nobody is watching? Does it raise prices whenever it can get away with it? Is it greedy for margin and therefore vulnerable to the disruption, the Jeff Bezos style disruption that your margin is my opportunity? Does it pay above average wages even though it doesn't have to? Does it inspire loyalty in the people it trusts? Those intangible assets, the research shows, are exceptionally valuable for investors to understand. In some ways, more valuable than the nuts and bolts stuff we tend to diligence when we focus only on the short-term kind of financial metrics of a company.
Of course, I'm going to turn that around because to your point, if sellers, when they sell their business, often focus on just the EBITDA, and they're trying to tell a story to a buyer why they should pay a premium. But you highlight that a seller's pitch, an owner who's kind of built this thing, and it's really, I like to say, it's their baby. They've cradled it.
Yeah, exactly right.
They should be selling more than just the EBITDA. What's interesting about
they should be selling the purpose. Absolutely.
Exactly. They should be highlighting some of these things, almost the kind of cultural fiber that they've built up that's unique, that, to your point, can't be replaced. And frankly, if you try to replace it, you probably lose.
And I'll give you a tip I learned indirectly from Warren Buffett. If you have a reputation as a buyer of somebody who will preserve the integrity of the things that you buy, and especially if you're willing to make those promises tangible through the use of something like a purpose trust or an ESOP or employee ownership trust, you can not only get people to sell to you in a competitive environment because you're saying, look, I'll preserve your life's work. You can actually pay a cheaper premium. So many seller finance deals are chosen over the highest valuation deal if there's a feeling that the integrity of the thing will be preserved by the new buyer. And of course, a lot of people make those promises and they just promptly break them. So increasingly, I think sellers are becoming more wary of promises. But instead of making your promise a vague handshake, make it concrete. Offer to establish a purpose trust or an ESOP. Offer to establish tangible mechanisms that will preserve the company's ethos. You might be surprised the deals you can win that way.
And if you were to look at the greatest challenge for companies today, particularly ones that are founder driven? What is the greatest challenge in preserving the kind of, you spent a lot of time in Incorruptible talking about how hard it is to preserve that special secret sauce that a founder brings to a company as it grows and as it becomes successful. And in my case, even when you try to sell it, right? Like what would you say is the core of preserving? You have some great structural and obviously policy, but when you look at it, would you say to an owner who's trying to preserve it or a buyer who's trying to preserve it, what will be the core to try to preserve it?
There's something I call the architecture of institutional longevity. And it requires building to a blueprint with two components. So kind of two halves of the equation, if you will, two sides of the same coin. The first is what I call the path of ethos. This is the internal alignment of every resource an organization touches towards some common purpose. If you don't build something worth protecting, I'm not that interested in helping you protect it. And frankly, the protections you build won't save you. The only way to build and install an institution that can last is that the human beings it touches have to love it. They have to feel the fire to accomplish its mission deep in their soul. And you can't get that if your mission is something lame or incoherent. The second thing is what I call the path of integrity. How do we build organizations that can keep their promises? So if a company is weak, if investors or any outside actor can pressure it to do whatever, well, it's not going to be able to keep its promise because the people making the promise won't be around to actualize it. So that's the domain of board construction, investor relations, like what are called alternative governance systems, like co-ops, employee ownership, industrial foundations. There's actually a lot of research about the best way to physically, through governance, shield and protect an organization to make it physically strong and less likely to buckle under pressure.
Eric, you've obviously putting Incorruptible out there with the hope that it kind of drives people to look at companies as more than just profit generators, or frankly, to value them than more than just being about profit. And
short-term profit, yeah.
Frankly, in some ways, to kind of create even more profit by valuing the other things that are so important about companies.
Yeah, exactly.
When you look at, and I think you did a great job in the book of highlighting how the last 40 or 50 years, the fiduciary duty is really just this kind of shareholder profit focus. Sometimes it really is just being a number crunching exercising as opposed to a bigger conversation. If you were to look at some of the ideas that you presented in the book and say, how do we get that shareholder profit concept to become more broader concept about, I think, as you say, a mission-driven company or the best interests of the company from a broader point of view? How would you say going forward, if you can have one or two of the ideas in your book become something that kind of pushes us away from a more limited concept of profit, how would you say we go there?
So I do think there's a lot more profit to be made if we start to think about these things. And one of my favorite examples in the book is a tiny little mid-market company once upon a time that is now called Novo Nordisk. And now Novo Nordisk is one of the largest companies in the world. And people are like, oh, why do you always tell these stories about these big companies? It's so intimidating. But like, if you read the history, if you understand where it came from, for a long time, Nordisk was this tiny little insulin laboratory. But from the very beginning, and this is the key to its success, from the very beginning, the founders understood that science and scientific research is a public trust. And they were very worried that one day, this is the 1920s, one day they might be a company that was in a position to sell life-saving medicines to a person. And they said, look, selling a life-saving medicine for a fair price, nothing wrong with that. But if I have a life-saving medicine and you have to buy it from me, I could charge you anything I want. So they were worried about the company becoming an extortion racket. So they embodied the company in this very special structure, a structure where they created a nonprofit foundation that owns the for-profit as a wholly owned subsidiary. But that's not the only way to do that. As in the book, I talk about lots of other ways the same structure can be effectuated. That structure has stood the test of time. The company is now around more than 100 years later. And in the book, I tell stories about how this structure allowed them to transform from a tiny little company into one of the world's largest, step by step, always keeping their eyes on the mission prize of conducting scientific research and developing new cures.
I have to ask you, you've been personally committed to this project, and in your work, you can really see it. The mission-driven company.
Yeah.
And you created a long-term stock exchange, which another manifestation of this focus of yours of really kind of almost structurally creating an environment where you kind of look at profit from a more broader, longer term perspective. What would you say has been, as you drive forward with the goal of trying to really grow this focus on mission driven has been the greatest challenge in the marketplace. What do you think is the hardest thing for people to pick up on some of these ideas?
The hardest part is the indoctrination that we have all received about what is the nature of capitalism. And it's really interesting to study the history. I lay it out in the book. So many of our modern best practices we've been kind of taught are the only and best way to do business, which already you can see the contradiction. If it's the only one, how could it also be the best one? We've erased all these other alternative paths to create this like totalizing focus on maximizing shareholder returns, even though the idea of shareholder primacy has absolutely no democratic legitimacy. We inherited it from a very small cadre of board members and academics and judges who just decided it would become what they call a normative consensus, not just a statement of what companies do, but what they should do. And I think the era of shareholder primacy is actually already over. We've already passed into the era of extraction primacy, which is even worse, not even good for shareholders. And unless we do something radical to change course, we're going to wind up with a world where the younger generations lose complete faith in our economic system. So we actually have an urgent need to change course and make a change. So once you accept, like, if you just say to yourself, if you hear what I'm saying, you're like, this guy sounds like a loon, I understand, it's okay. But if you're willing to at least say, you know what, I'm willing to look at the evidence that some of the inherited economic dogmas that I grew up with, that I learned in business school, that I learned in my education, like, if I'm willing to let some of those go, just by looking at the evidence, you will be radicalized in no time because the evidence is overwhelming and utterly fascinating.
I want to ask one last question, if I can.
Please.
If you're an M&A practitioner and you're looking at these businesses, and you brought out a number of examples in your book about things to look for in companies that you can't often see in the balance sheet, and we've talked already about a couple of them: trustworthiness.
Yeah.
Other tips that you would say for someone who's looking to sell or looking to buy, to highlight or to focus on, and to, these are almost questions that demonstrate intangibles that can really add value to understanding the true value of a business. I'm just wondering if I could just get some more of those things that you say, look, these are easy, kind of low-hanging fruit for you to look at beyond just the balance sheet.
Sure. Listen, balance sheet's important. Okay, I'm not taking anything away from it. Okay, first of all, I'm dying for one of your listeners to come back to me and say, hey, it's time to do this. I've had this idea for years to create what I call no exit ventures, because there's so many companies out there that are structurally incapable of exiting because of the way their cap table is set up, or because they're afraid about losing control of the company. And we have this massive succession crisis where you have all these people who are aging into retirement, but their kids don't want to take over the family business. So if you can really create a mission-driven structure, we could actually like convert a lot of those companies all at once, and you could build a massive Berkshire Hathaway style business, just owning and operating them. Anyway, but in order to do that, we have to get good at identifying which companies are mission-driven versus which ones are mission-hopeful. So here's some of the things I would look for. First question is always, can people articulate what the mission is, and is it written in the corporate charter? Companies that don't write down what they're trying to accomplish rarely accomplish it. So companies that claim they're mission-driven but then have a charter that's all about shareholder primacy are actually lying to you. So that's good to know. Second question is, does the company have a mechanism whereby it only can make money by achieving the mission? Or if I show up with a black bag of cash, can I talk them into doing something else? A story that I didn't include in the book, there was this healthcare company a couple of years ago that was a unicorn, a big high valuation company, got caught up in the Purdue Pharma scandal because they got bribed to push opioids to their doctors, who then pushed them to their patients. And when the paperwork all came out, everyone was horrified and the company was driven into bankruptcy. And what's sad about that story is they only took like $1 million from Purdue Pharma. They didn't even make that much money. They sold out for very little. And the only way to make sense of that is you got to be like, well, I guess somebody in the room thought, I guess our job is to make money by whatever means necessary. The idea that you should make money by whatever means necessary is a huge source of future liability. So if you can flush that out, you can avoid those kinds of problems. And the third question I would ask is whether the company has a mechanism for valuing trustworthiness. Does it reward employees only for hitting their numbers, therefore allowing employees to trade against the company's trustworthiness to get a bonus or like to advance their own career? Or have they found a way to avoid the zero-sum thinking that kind of conventional OKR system tends to drive?
Eric, this has been super interesting. Thank you for joining us. I greatly appreciate learning about you and your work. And then I'm super excited to have this Incorruptible work become part of the lexicon, and it's very interesting and thought-provoking, and thank you for telling us your story and the story of Incorruptible.
Awesome. Well, thanks for having me.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.